Do you understand the requirement of the question? Are you with me?
Yes, you are following.
Do you understand the requirement of the question, just like I've just explained?
Yeah, somehow.
Yeah, some we understand.
Okay. As we go along, you'll understand it more. Okay. All right. So I'm going to open, I've already projected my Google Sheet spreadsheet. So I'm going to open a new worksheet. So I just click on my plus, then I double click on it. Then I just call it Trecor Company. Trecor. So I just call it Trecor Company. Right. So this question will consume some time. So bear me out. And as we go along, if you don't understand anything, always stop me and let me explain. Please, it's really, really important to understand this question. Very, very, very important. Okay? Because something like this will come in the exams. I've already given you a tip here. Something like this will come in the exams. Okay, am I not too generous?
Yes, you are.
But if it does not come, don't blame me. Yeah? If it does not come, don't blame me. Okay. Right. So we start with the heading Trecor Company Limited. So just write Trecor Company Ltd. Okay. So that's the name of the institution. And what is going to be our statement? Our statement will be net present value analysis, NPV analysis statement. I just shorten it, NPV analysis, NPV analysis statement. Okay, so let's do our format. Okay, let's do our format. So the first column will be our details column. Okay, but we'll just say year so that we can give year as, we'll give each heading as year. Okay, so we're going to increase this a bit. So this will be year 1, year 2. Okay, the project is how many years?
4 years.
4 years. 4 years. Okay, but when we are doing our statement, please, I think it's very, very, very important to get yourself familiar with the question in exam before you attempt it. Okay, this is why I took this trouble of trying to analyze the question before ever we attempt it. The project has got a duration of 4 years, but I have already mentioned, and of course you know very well, that tax is paid in arrears. So as such, the 4th year's tax will be paid in year?
Year 5th.
The 4th year's tax will be paid in which year?
In year 5th.
That year.
Okay, it will be paid in year 5.
Yeah, this is, yeah. Yeah, in the 6th year time, yeah.
It will be paid in year 5. Take note of that. Okay, it will be paid in year 5. So as such, our format should cater for up to 5 years. Take note of that. And we've been told in the question also that all the numbers should be rounded to their nearest 1,000. So we say $1,000, 1, 2, 3. Okay. So all the numbers should be expressed to $1,000. So just do, sorry, $1, 2, 3. Okay. So we will align this. So I'm going to copy this throughout. Oh, sorry, it's replicating in another way. So I'm just going to copy it. And I'll just paste it. I think that's better so that it does not Give me that. So I'll do all the alignments to the right. All the numbers should be aligned to the right. Okay, and I want to reduce them because they will be in their thousands, so they don't have to be in bigger columns. Okay, right. So now we've got our format. So we're going to nicely center this. I love my headings to be in white and a blue background. Okay, and centered, I'll merged and centered. Okay, I'll make it bold. I'll increase the font size to 14 this time around. So I'll do the same thing. I just replicate this. But this time around, I want to reduce the font size to 12 because this is the heading. And I also want the background to be white, but then the text to be blue. Okay, this is my favorite. You can choose any text. Okay. So this is what we have. This is the way our format is going to look like. Okay. Now we're going to go and open a new worksheet and call it what? Our workings. So we need our workings. So first page, always in exam, let it be your main work. And the subsequent pages should be your workings. So I'll open a new worksheet. I'll call it TRECOR company. I just say workings. WORKINGS. So I just say, I just use this description here. I copy and then I paste it here so that we can use that as our heading for this working sheet. So I take it to 12, I color it to blue. Okay. So our workings 1. Now, when we are preparing a statement like this, we should always start with our revenue. Okay, and it's in fact the first thing that has been given to us. So, in other words, the statement that we are trying to prepare is our profitability statement, but it's only cash profit. Okay, only cash. I've told you that we don't deal with any notional cost or notional revenue. Okay, is that clear?
Yes.
Okay. So our first working should be on what? Our sales revenue. Okay. So working 1 will be on sales revenue. Okay. So our sales revenue is what we're going to calculate first. And this sales revenue is going to be for how many years?
4 years.
4 years. So we have our number of years here on top. So year 1, year 2. So we replicate that up to year 4. Okay. In the question, we've been asked to calculate up to 4 years, isn't it? Because the lifespan of the project is 4 years. But why did we have additional 5th year here? Who can tell me why?
It's because of the tax in areas that we are going to pay.
Okay, because of the tax. So the tax of year 4 will be
tax
paid
payment,
in
the
year.
tax areas.
Okay, everybody? Right. So, so we're going to calculate our sales revenue, and it will be our first item here. Okay, everybody, is that clear? Right. So our sales revenue is what we're going to calculate. Now, in order to calculate our sales revenue, what are we going to consider here?
It's the units and the price.
Yes.
Is the units and the price.
And the price.
So in
And
other words, the
quantity.
sales demand and the selling price per unit is what we're going to consider here. Okay, good, brilliant, brilliant. Thank you. Right, so we start with sales demand. Demand, of course, is in units. In year 1, what's the demand?
It's 35,000.
35.
Okay, so let's also express these numbers. Let's format them so that they can be in, I don't want any DP. but then I want to have 1,000 separators. Okay, so the first one is 35,000. The second one is how much?
40.
40.
40,000. And the third one is
50,000.
50.
1, 2, 3. And then the fourth one is
25,000.
25, 1, 2, 3. Good. So what about the selling price? I'll just use SP per unit. Selling price per unit. How much is the selling price per unit?
It is
It's
12
3%
dollars per
It's
unit.
12.
It's 12.
But we have instruction that it should be increased by 3% per year.
Okay, good, very good. So what is that 12? What's that selling price for? The selling price of 12, what is it?
I think it's the selling price for the first year.
It is in year 0. That 12 is in year 0 now.
Okay, good. Oh, wow. It cannot be for the first year because you will not be able to know the selling price for year 1. Year 1 has not come yet. So just like Mohammed rightly said, is the selling price now 0? Because you will definitely know the selling price of your product at the moment. You'll definitely know it, isn't it? So the selling price that is given at $12 is the selling price now. And we've been told that every year is going to increase by 3%. So what will be the selling price per unit for year 1?
Yes, that is, we add 3% to $12, you know.
3% to $12. Okay, so how do we do that? How do we add 3% to $12, Mohammed? Under the column of year 1?
Yes, year 1. Then we will just say we add, okay, 1 or 3, or it's 2 ways we can do it. We can just say 3% by 100, then we added it back. Multiply by 12, sorry, and we added it back. But
No,
we
please,
can make this shortcut.
I want you to give me the accountant's way of doing it, yeah? Not the way the shopkeeper.
Okay. Okay, we can do it like this: 12 plus 103 all over 12. Then we added it back.
Let's make life easy for us, and in practice, what we're going to do. Okay, let's make life easy for us, and in practice, what we're going to do. So I'm going to give. I'm going to put. Let me just expand this a bit. So reduce this a bit. Okay. So what we're going to do is we're going to put our assumptions here. Our assumptions are going to help us to do our workings, yeah? So we're going to put our assumptions here. ASSUMPTIONS. Okay, so these are factors that are given to us that we're going to use in our calculation. Okay, so the first one is, and our assumptions are given in percentage. So let's highlight them and format them to percentage, highlight them and choose percentage here. Fine, so that easily we can do that. So the first one is a selling price. Our SP, I'll try to make it short. Our SP is what? 3%. So we just type 3. Our VC, our variable cost per unit, is what? 4%, isn't it? Then our fixed cost,
4%.
Our fixed overhead,
6%.
our fixed overhead is 6%. Excellent. So we're going to use this in our calculation. Now, since we have got our assumptions there, can we use them in the calculation? Who can help me to do a proper and professional way of calculating here?
Yes, let me try, Mr. Fofana.
Yes, go ahead.
Okay.
Yes, the 3% will be like on top of 100. That's gonna be 103 divided by 100. That's 1.03.
Sorry, Mohammed. Sorry, we have not finished. Let's add the prices also. The prices per unit. Yeah. So let's add the prices per unit, because this is what we're going to be faced with in real life. So the prices per unit. In fact, we can make it. We can put it here, to be honest. we can get it close to them. We can paste it here. Okay, so these are the percentages that we're going to calculate. So we can just get it close to it. Okay, we can just get close to it here. Let me reduce this so that you can be able to see everything. Okay, so what's the selling price per unit given?
12.
So I'll
12.
say price per unit at year 0.
Is
Yeah.
12.
Okay. Price per unit at year 0. So I'm going to wrap this so that it can nicely fit into. So price per unit at year 0. So what are the prices per unit at year 0? For selling
Year
price?
0 is 12.
Is 12.
Okay, 12. Okay. For variable cost?
7.8.
7.8. Okay. Fixed production overhead at year 0 is what? 25,000.
25. Yeah.
Excellent. Okay. So let's take note of this. So now we've got our assumptions. Ideally, we could create another page that will, stipulate our assumptions and we use in our calculation, but we can put it on the side. So that's fine. Okay. So this will make life a lot easier for us. So now with this in mind, so what will be the formula for year 1 for our selling price?
Can I try?
Yes, try one.
Yes, it will be equals to
Equals
12.
that
one it is going to be J3
Gate 3,
plus,
Gate 3 plus,
yes, in bracket,
in brackets,
I3 I3.
I3.
No, that one. The way I wanted to solve it, it is going to be like 3% plus. Yes, click J3 again.
I click Gate 3, okay.
Times I3
times I3, okay.
close bracket.
I close the bracket.
Yeah.
That
I-
gives 12.
But that one I think is because of it is not.
Okay. Let me increase it to 2 decimal place. Yes, 12.36. Okay, correct. It's correct, Umar. Okay, it's correct. So what Umar has done is he has taken the price, the selling price, plus, okay, the rate, which is 3% multiplied by the selling price. It's correct. Okay, it's correct. So you can use that. Okay, so that simplifies. That's easily explainable. So now what do we do?
I think you should make it absolute in order for you to be able to replicate it.
We need to make it absolute in order to replicate it.
Yeah, I think when you replicate it like this, it is not going to work.
It's not going to work.
Yeah, like the same 12 point this will.
No, in fact, you cannot replicate this. This is just the first one. The second one, what you need, the second one will depend on this. The third one will depend on this. The fourth one will depend on this. So you cannot replicate this. So you need to do a fresh formula in the new one. So what will the formula be? You'll use this and then you multiply by this plus 1. So we say equals this, because it's year on year, Umar. Okay, it's year on year, isn't it?
Yes, I think you can replicate it and later you just change
This multiplied by, bracket opens, this F4 to make it concrete, plus 1. Let's see if this is going to work. We enter. So the next one is 12.73, which is correct. Let's replicate this and see what's going to happen. The next one is 13.11 and 13.51. Correct. So all of them are correct. So Omar, you have calculated the first one based on this. The second one is going to depend on the first one, just like the third one is going to depend on the second one. The fourth one will also depend on. So after doing the first one, is independent because that one is based on this. So now, unless you open a column here and say year 0, then if you have 12, then you can just use your formula like this and replicate. Okay? Otherwise, this is the best. So what we have done is, so we've taken the previous selling price, okay? We multiply that by the rate plus 1, meaning, 1 plus the rate, which is like if you're going to gross it up. So it's like we're grossing it up. Yeah? So we can, in fact, use our gross up formula here as well. Do you understand?
So I don't understand that.
Huh?
I don't understand that part.
Okay. What we are saying is, now this is fine.
Mr. Fofana, I am also lost.
You are also lost. Okay, good. Let me explain it.
Can you please repeat it?
Okay, I'll repeat it. Excellent. I'll repeat it. So I'll just take off everything and repeat it. Okay. So all of you understood up to 12.36, yeah? So what we did was we took the price at year 0, okay? Price at year 0, we multiplied that by 3%, okay? Plus the price itself. So 12 plus 12 times 3% is the same. So that gives us 12.36. Is that clear, everybody?
Yeah, we understand that.
Good. So now the second year, these prices are year on year. The 3% increment on year 1 is going to be an increment on year 0, which is 12. So the other 3% increment on year 2 will be on 1. Will it be on year 0?
No, it will be on year 1.
It will be on the preceding year, which is year 1. So if it is going to be on the preceding year, then now what we're going to do is we're going to take this, multiply by 3% plus 12.36. If you want, you can use that. Or alternatively, you can say, okay, to be consistent with the way Omar did it, so we could say equals this number plus, bracket opens, this number multiplied by, how to call it, the 3%. So we close the bracket, we enter. Okay. Do you understand that? So that's one way of doing it.
Yes, that's what I understand.
This is what you understood, Umar. Okay.
Yeah.
So you can do it this way. Okay. Alternatively, you can take the 12.36.
Hello.
Yes.
Mister. Can you do it this way too?
Can we? Yes. Are you following? Hello, class. Are you following?
Yes, yes.
Okay.
Yeah. We are.
Good. So now, if we want to replicate this, mind you, we must make sure the ones that are fixed, we keep them fixed. So in this formula here, which one should be fixed?
The 3%.
The 3%. And what's the cell reference for 3%?
I3.
I3. So we should make sure the I3 is fixed and the rest will vary as we go along. So the I3, we just click inside it and press F4 so that we can have $2 sign. And now we just replicate this. Simple. I hope it's clear now, everybody?
Yes, it is.
It's clear now? Okay, Omar, because I did not use your method, that's why you are lost, eh?
Yes, because of the +1 that you have did. That's why.
Yeah, actually, you can use the +1 also. It's going to work. It will give you the same answer as you can see. But let's stick to this. Let's stick to this. Yeah. Brilliant. So now we've got our sales demand. So we're going to calculate our sales value. We've got it on top. So what will be our sales value? What formula?
Selling price multiplied by the demand.
Okay, good. So equals C5 multiplied by C6. We enter. Okay. Okay, so that's 432,600. Then now let's just replicate. Simple. Once we understand the concept, it becomes very, very easy. 432,600, 509, 200, 655, 500, 337, 653. Okay, there is a little bit of rounding of error here and there. Okay, but these are all correct numbers. So now, what we do is, before we go, any number that we calculate, let's not forget the number. Let's bring it to our answer straight, so that in case we run out of time, we're not in trouble. Okay. So let's go and bring the sales revenue. So I'm not going to type anything. I've already typed it, so I'm going to bring it back here. So I'll just say equals. I come to my working, then I'll click on this. I enter. Okay. Sales revenue will be here. And then if I want to bring the number here, the sales revenue that I've got here, but I want it to be in thousands, what should I do?
I think that when you can click it and then you divide by 1,000.
Okay, so what do I say? So I'll be in where the answer is. I say equals.
Yes. Just go to the workings.
Workings. Then I go there.
Yes. Click the first one.
I click on C7 of the workings. Divided by 1,000.
Yes.
Simple. Okay, then I'll just replicate that. So I'll take all this thing to 0 DP. So I just go to format, number format. I'll reduce the DP to 0. Okay. So 433, 509, 656, and 338. 0 for year 5. Okay, is that clear, everybody?
Yes.
Yes.
Mr. Fofana,
Yes, ma'am.
if you reduce these decimal places to 0 DP, is it going to be correct considering the fact that other figures, this is in thousands and other figures will be at the back?
Yeah, it will be correct because what you are doing is you are expressing them to their 1,000. If you have to express them to their 1,000, you cannot just write the number like that. The number is, what you're trying to do is you're trying to summarize it, but you're not changing the number. You understand? So yes, it will be correct.
Okay.
Mr. Fofana, the 1,000 that you have put on top, I think it is only zeros that are saying there.
The thousands that are?
That you put, previously you put 1,000 on top to source that.
Oh, okay, fine. Oh, what is wrong? Where have they gone? Okay, it's because of the formatting. It's because of the formatting. Okay, I'll take them back. Yeah. It's because you know I changed, you know, I highlighted everything and formatted it. You see, it was like this, wasn't it? So what I should have done should be to highlight only these areas, and I format that to 0 dp. Then I just express that. Is it clear now, Omar?
Yes, it is.
Okay, good. So let's go to our second working. Our second working will be on what? Working 2 will be on. What's the next
Variable
item
cost
to
per
calculate?
unit. Variable
Variable cost.
Variable cost.
Our variable cost. VARIABLE. Variable cost. Good. So our variable cost also will depend on our sales demand. Is that the case? Why is it going to depend on our sales demand?
Because the variable cost varies with the number of units that they have that they can produce.
Exactly. The variable cost will always vary. It will always change with the activity level. The activity level here is the sales demand in units. Simple. Okay, simple. So I'm just gonna leave one space and paste this here. Just take this off. Good. So the variable cost also, so we need to find the variable cost per unit, VC per unit. Okay, so let's use Omar's format still. Omar's format, just like Omar's way of calculation, just like the way we did it here. Let's be consistent. So can you give me the formula here? I'll have to choose who to give me that. Mariama Hydra, can you give us the formula that should come here? It's the same concept, just like we've seen here with our selling price, our variable VC, the same thing. So can you give us the formula that should come here? The selling price that should come here, please?
Equals to.
Okay, equals, Mariama?
Yeah, equals to. 7.8.
Should I type 7.8? Should I type 7.8?
J4.
I click on, is it J4 or J5?
J4.
Okay, J4.
J4. Plus.
Plus, good.
Bracket opens.
Bracket opens.
J4.
I click on J4 again. Multiplied by.
Times I4. I4.
Multiplied by?
I4.
I4. Excellent. Brilliant. Brilliant. Thank you so much. So we need to express that also to 2DP so that we can be able to see the percentage. So that is straight away 8.11. Okay, 8.11. Good. Thank you. Thank you, Maria. Right. So the formula on the next row, can you give me that? Ooh, Sajo Binjai. Sajo, are you with us? Sajo? Yes, Sajo. Can you give us the formula that should come on the next row, which is D10?
Yeah.
Give us now, Sajo. We're running out of time. Equals,
8.11.
Should I type 8.11 or what should I do?
Yes, it will be C10.
C10, Sajo, good.
Plus. J4.
Plus J4.
Yes. Open bracket J4.
Open bracket first.
Yeah, J4.
I click on J4. Should I click on J4?
Yes, you will click on J4.
Honey? Gear 4 we
Yes,
have
you
used it already.
Gear 4.
No. We have used gear 4 already. Who can help her?
I think it's going to be C10.
We click on C10 again.
I4.
C10
Yeah.
again.
And I4.
And multiplied by
Multiplied
I4.
by I4. So which one should we make fixed?
The I4.
The I4.
We make it absolute. Yeah.
Excellent. Excellent. Very good. I'm really happy that people are understanding. Okay. Then I close the bracket, I enter. So that gives me 8.44, and then now easily I can just duplicate. 8.44, 8.77, and 9.12. I'm really happy that you're understanding this. Please, everybody, try and know how to do this. In exams, you might not necessarily know how to do this, but even in exams, I can bring questions like that and ask you, how can you calculate it in Excel? I'll give you the frame, and then you'll tell me what are the formulas. What are the formulas that you can put on each of them? And alternatively, you can be able to, I can ask you to calculate it using your calculator in the normal way. But it's very, very important that you know how to do it like that, because in practice, you are going to use spreadsheet to calculate it. Okay, so brilliant. So this is good. So now what is going to be our total variable cost? Our total variable cost, Amadou Jane, can you tell us the formula that we should put here on the C11 to calculate our total variable cost? Amadou.
Equals to C10 times
multiplied by
times C5.
And what's the sign should I use? What sign should I use?
Asterisk. Asterisk.
On top of 8. Okay. Multiplied by what?
C5.
C5. Excellent. Then I enter. What else should I? What should I do next?
Then you can drag.
I just duplicate. Okay. Okay.
To the right.
Right. I just
duplicate.
Excellent. Good. Thank you. So I want to bring the variable cost here. So the same thing. I just say and then I click on the variable cost here, and then I use equals the variable cost here divided by 1,000. Okay. So I just duplicate. Okay. Correct. So 284, 337, or 338, depending on the number, 439, and 228. Okay, is that clear? So we have our sales revenue, we have our variable cost. What can we calculate now? What can we calculate? Contribution, isn't it?
Contribution, yeah.
Yeah, we can calculate our contribution. So our contribution is the difference between that sales revenue less our variable cost. Okay, so variable kept. Yeah, is that clear? 149, 172, 217, 110. Is that clear, everybody? So far, so good?
Yes, it is.
Good. So now, what other costs should we consider before we arrive at our profit?
Fixed production.
The fixed costs.
Our fixed costs. Okay. So our fixed costs, we don't need any other formula. We don't need any other working, but we can do it here. So our fixed costs, we can do our formula here. by bringing the rate for year one. The rate for year one will be equals to bracket opens when we click our workings. The rate for year one is this. Okay, that's to 25,000 multiplied by the percentage. Okay, bracket closes plus the 25,000. Enter. Okay, and all that we have to divide it by 1,000. All that we divide by 1,000. Okay, so that gives us 27. So there is something that needs to be fixed. And what should be fixed according to our working? This should be fixed. And this should also be fixed. But then, should we replicate this formula? No, we cannot replicate this formula because the next one is going to start from here, just like we've done before. So for year two, is going to be equals this. Okay. Plus, bracket opens, same way we have been doing this, multiplied by, I come here, the rate, and we're going to make it fixed. We close the bracket, we enter. You see? So the same way, I've not done anything new, but the same procedure we have used here for the variable cost and for the selling price is the same. Okay? For fixed cost, the price at year zero now is 25,000 and is supposed to go up by 6%. So for year one, it's going to be 27. Then year two onwards will be like this. Okay. So it's going to be 27, 28, 30, and 32. Okay, so far so good, everybody? Shall we move?
Yes, we can.
Yes,
Okay.
yes.
We can move. Brilliant. I'm happy that you understand it. So after considering the fixed costs, we need to calculate our net cash flow before tax. So we have our net cash flow before tax. Our net cash flow before tax. And our net cash flow before tax will be what? So give me the formula for the net cash flow before tax. Equals. Yima, give me the formula. Equals.
We subtract the two, the contribution and the fixed cost.
Okay, the contribution and the fixed cost. So give me the cell reference for them.
Equals to bracket open.
Mm-hmm.
C10.
Mm-hmm. This one, you can do it without opening any bracket. So if you do bracket opening is correct, but if you do without bracket opening, it's also correct. Yeah. Okay, C10.
Okay, C minus C11.
Minus C11. We end. Correct. Thank you. So we replicate. Excellent. So we have 122, 144, 187, 78. Brilliant. Good. So we have our net cash flow before taxation. So now let's calculate our tax. And we calculate. So we have two tax. We have our tax cost and we have our tax benefit. Okay? What are we going to, what will be our tax benefit? Makam? Makam, what will be our tax benefit? Makam Jao? Are you with us? Adese, you've been hiding. You've been hiding. Adese, are you following us?
Yes, Mr. Fofan, I'm following.
You're following. Okay. So we said there will be two tax here, tax cost and tax benefit. So what will be our tax benefit?
Tax benefits.
Mm-hmm. Okay, don't worry. So what will be our tax here? So tell us how we're going to calculate our tax. We will come to tax benefit, don't worry.
Okay.
Adese is on our feet. Adese?
Okay, the tax. I think is there a tax percentage?
Are you asking me or you asking yourself? I thought you have the question before you, Adese.
No, I don't have it before me. I have only one device, so I'm just following.
You have only one device. Yes.
Yeah.
The tax rate is given to us at 30%.
Okay, 30%.
Okay, so how are we going to calculate the tax?
Then you find the tax, the net cash before tax times the rate, the tax rate.
Okay, and for year one, where will we calculate our tax? It will be on here or on where? When are we going to pay the tax for year one? In year one?
It will be here, the tax on the tax.
What I'm saying is we have to calculate the tax for year one, and it will be paid in a particular year. So for year one, are we going to pay it in year one?
Yeah.
In year one? They say you are not following us, to be honest. You are not following us. Okay, so we're going to put our tax
tax is paid in arrears, so it's going to be paid in year 2.
Exactly. Exactly. So I'm going to put our tax rate in our assumption. So I'll go to the working sheet, then I'll put our tax rate. Our tax rate is 30%. Okay, so that we can use it in our calculation. So tax, I'll say 30%. 30%. I say please try and follow, yeah? Right. So tax at 30%, tax for year one is going to be paid in year 2. I've explained that how many times? Okay. So the tax on this net cash flow in year 1 is going to be paid here. So we say equals, we take this, we say multiply by, we go to our assumptions, multiply by the tax rate here, and we make this fix. We press F4, we enter. So we apply this directly. Okay, so we're going to roll it over up to year 5. So this will be one of the benefits of our year 5, because year 4, the tax on year 4 will be paid in year 5. Okay, so the tax will be 37, 43, 56, and 23. Okay, so the tax benefit, we are going to calculate that the tax benefit will be on what? So what will the tax benefit be calculated on?
The capital allowance.
The tax benefit will be calculated on the capital allowance, because the taxman, GRA, is going to reverse our depreciation cost and all other notional costs. If we take depreciation cost from our calculation, they're going to add it back. So if they are going to add it back, they will give us something in return. And what is that return? They will give us capital allowance. Capital allowance rate of 25% in this case will be calculated so that the capital allowance on our tax or on our assets will be given as tax benefit. Okay, simple. So we're going to calculate our capital allowance. So that would be our working 3. Our working 3 will be tax benefit on capital allowances. Tax benefit on capital allowances. So that's what we're coming to do here. So that will be on working 3. I'm going to add 3. So how do we calculate the capital allowance? we use the value of our assets. How much is our asset?
250,000.
250,000. Okay, so we'll have here, we'll have our calculations. Okay, and the first thing that will come will be our capital allowance. Okay, next column will be our written down value, just like when we are calculating our reducing depreciation method, our reducing balance depreciation method. Same format. And I know it's not something strange to you. And our tax benefit will be the last column. Tax benefit of 30%. So this way we're going to calculate it.
It's 25%.
Sorry, 25%, sorry. No. Tax benefit on capital is the capital allowance that is 25%. Tax benefit on the capital allowance is 30%. It's the same tax rate. Omar. So year 1, year 2. So we do our year 1, year 2, year 3, year 4, and we take them to Santa. Okay. So we all agreed that the cost of our asset. Okay. You know, when we're presenting our accounts to GRA, is our assets that we're going to depreciate. But GRA will not allow us that. So instead of using our own depreciation method, they will slash off, they will add back our depreciation and then say, come on, use your capital allowance. So we're going to calculate our capital allowances and then we take tax benefit on our capital allowance. Okay? So instead of, so we're going to lose, because if we lose, if GRA adds back our depreciation, then that means we are going to pay more tax. Our tax benefit will reduce that effect. Simple. So they take and then they give back. I hope it's clear.
Sorry, Mr. Fofana, I'm lost. Why did you take the 30% as this benefit?
30% will be, it's like we're going to calculate our capital allowance. Our capital allowance will be 25% on this. We're going to calculate, don't worry. So, but the tax that we're going to calculate on the capital allowance will be 30%. That's the tax rate.
And that is the one that you are going to return back. Exactly,
yes. Okay, so we're going to have our capital allowance here. Okay, our capital allowance. So our capital allowance is 25%. So we're going to put that here as one of our assumptions. Okay, so year 1, how are we going to calculate our capital allowance? How are we going to calculate our capital allowance?